Hello everyone, and welcome to this morning's webinar. And I do apologize, we seem to have had not just a minor technical glitch, we had a complete technological breakdown with all our charts disappearing, and I won't bore you with the details. Anyway, here we are, ready for the webinar. As I said, thank you so much for your patience. But as always, before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, markets can be a very, trading can be a very risky business. So please don't ever think of using money that you cannot afford to lose. And for the benefit very quickly of those of you who may be coming along for the first time, we're going to be looking at the Forex market from a technical analysis point of view through the prism of what we call volume price analysis. And this really looks at price action and volume, really to determine whether what we're seeing on our charts is genuine, authentic or not. What we also do is obviously look at the fundamental news, and third key element of our approach to the Forex market is we also look at what is happening in related markets, because there are certain currencies and currency pairs which reflect sentiment, which reflect individual instruments, individual commodities like oil. You know, it has a close relationship with the Canadian dollar, and it's something David and I kind of put together. Now it's almost sort of 7 years ago, this 3D, what we call this 3D approach. We do what was called cross-market analysis, if you like. And when we started, there were only sort of, I think, maybe one or two other people out there who even even thought about the idea of looking at the linkages, not only between the capital markets but also the linkages within the market itself. Nowadays, you can't move. You'll trip over every commentators and analysts who all refer to market analysis in this way. They look at the chart, they look at what the fundamentals. There is even a fourth dimension these days, and that fourth dimension is Donald Trump. He has a dimension of his own, as we saw yesterday. Right. For the Forex market in particular, we then took it one step forward. These are indicators that David and I developed for our own trading, and I know we have some of our Forex students with us today. We have some of our users who just have the what we call the quantum indicators, because the other thing we discovered with the Forex market, it was the last market that David and I actually approached and became involved with. We started in futures, God help us, probably the worst place to start as a new trader. We traded stocks. We even did covered call writing on our portfolio, so we kind of know quite a lot about options. We didn't really the bond market. We never really got directly involved with that, but you can look at a bond chart and analyze it in the same way as you would any other chart using VPA. Then we came to the Forex market, and it was and we have been kind of fascinated by it ever since, not least because you are trading one entity against another. It's almost like one economy against another. And we soon discovered that you really had to kind of try and identify the flows into the individual currencies to see, whether we talk about strength and weakness, and obviously in a pair, if one goes up, the other one is going down, which is why we developed these indicators. We have the CSI, which is the flows into the individual currencies. The matrix takes that data and ranks the pairs, if you like, so gives us the strongest pairs, the weakest, and those that maybe not doing anything in the mid, not doing anything, which sort of are stuck in the middle in congestion. Then we had this indicator, which is array, because we wanted to look at, if you like, the strength of trend, and I don't think there's any other indicator quite like it on the market, and maybe David will look at this in a little bit more detail, and I'll actually show you how I use it in conjunction with certainly the matrix and the CSI. And lastly, we have our heat map, which looks at the performance of all the pairs across multiple time frames, and it just saves looking at, as you said, how many however many charts that that equates to on that indicator. But I think, as always, the best way to consider VPA, consider the indicators, is actually to see what's happening on the markets. Right, very quickly, don't have to tell you what happened yesterday. It was fairly spectacular, with DT coming out of discharging himself, or maybe his doctors discharged himself from his coronavirus scare. You all saw the media photographs, and markets certainly from the end of last week responded accordingly. Now, how that translates into the forex market is obviously there is a flight into what we call safe haven currencies: the Swiss franc, the dollar, the Japanese yen, and then lo and behold, everything wasn't as bad as was first feared. He's fine, and markets moved higher. But at the back of that, as well as the issues with obviously the virus and the election that's coming up, bubbling away in the background, there are a couple of issues. There's always the US-China dispute debate going on about tariffs, but there's also been this thing about stimulus in the sense that whether the government would come with more help to people who have companies, people who have lost their jobs, and that's what caused the ructions yesterday. Donald took a unilateral decision that all negotiations were off. They were supposed to have continued yesterday and spill over today. They can't agree whether to spend 1.8 trillion or 2.7 trillion. But hey, when you're at that kind of level, what's the difference? A trillion here, a trillion there. What difference does it make? Anyway, it was enough to absolutely spook the markets, and you all saw the result. Markets this morning have kind of settled a little bit. Let's have a look over at investing.com. They call it mixed. This is the futures for the YM. This is up. It's up 100. It's rallied, come back 120. That's the equivalent of the S&P 500. That's up 14. The Nasdaq, which is the one that's been sort of leading the charge lately, that's managed to come back 52 points. Let's have a look from yesterday. These markets, this awfully, it looks very nice, and from a sentiment perspective, oh great, but we're certainly not out of the woods by any stretch of the imagination. And all I can suggest is, if you don't already do so, occasionally, if you just hop over to my personal blog, where you'll find analysis, all sorts of analysis. You won't really find a forex analysis. You'll find that at my Facebook page here, which is called Learn Forex Trading. I tend to keep a broader market analysis for the content for the main blog, and this has and the Nasdaq. You'll find the Nasdaq, the YM. You'll find commodities, and I'm actually going to be doing more stocks moving forward, because the stock market is coming into a period of I would say chaos and volatility. So it's a very interesting point. But the point is not only will you get a feel for what is happening in the market generally, but you will find annotations of charts which will help to explain the concepts of VPA, how we read the markets charts using VPA. This is on the slower time frames, but the principles are identical. It really doesn't matter whether this could be a minute chart or could be a daily chart. So it's just a nice way of becoming more familiar with volume price analysis. There are obviously the books on Amazon, one of which is a book of examples, one for stocks and indices and one for forex as well. Let's have a look at what's happening with news. I've got Forex Factory here. What have we had so far? Not very good news for the euro. German industrial production has come in way under than as was anticipated. You've got the French trade balance, but nothing sort of dramatic, nothing that's as classified as hugely market moving, certainly on Forex Factory. But some of our students have moved over to Financial Juice. It's one of the more cost effective, it's for a live news feed. The calendar tends to be much more comprehensive. It picks up Amar, who developed this this product, Financial Juice, is someone we've known for some time. He's kind of, I think he's put together a really nice feed for traders. You can see here, picks up stuff from FX Street. I think you can go in and set up your own defaults with the feed. I find it quite useful. The ones that the breaking news themselves, I think they probably take from one of the major news providers like Reuters or Bloomberg, and he's got all sorts of plans for the news feed. But the calendar, let's have a look. If this, interestingly, we've got the Halifax house prices month on month. He actually gives it a red. House prices are very important to the UK economy, but really for the UK, it's what is happening on Brexit. And we've had some lively price action with the British pound on whether there's going to be an agreement, there's not going to be a deal, there's not, all sorts of things. And there is a deadline. Is it the 15th of October, David, for Brexit? And which brings me to another point, which I know I have made before, and that is when you start, when traders, if you're very new to this, the one thing I would really urge you to do is you really have to get to know the currency and currency pair that you are looking to trade. So, for example, I've been looking at the Aussie dollar. Why? Because the Aussie has been moving quite nicely. It's been moving nicely because the markets are in, they've kind of recovered some of their poise. And the two on the matrix, we can see here, we've got the Aussie yen, which is often a proxy for overall market risk. If the Aussie yen is rising, then you can be, you know that the market is in is in risk on, and by that I mean it's buying risky assets like equities, for example. If that is falling and it's down at the bottom, the market isn't very happy. So when you look at a pair like that, you've got the Aussie and the yen, and you've got obviously the Aussie and against the US dollar, which is a popular pair that people trade. You have to get to know who are the central banks, who's who at the central banks. When are you going to get news for the Aussie and the US dollar? Well, the early part of the trading month, there's always news for the Aussie dollar. We've had the RBA, we've had the retail sales, so you get a feel for what is likely to be moving the individual currency from a fundamental news perspective. And then when you pair it together with a pair, as we have done here with the Aussie yen, it then takes on another dimension, and you think, it also represents, something else in the market. And of course, with the Aussie, the other huge important thing about the Aussie, you really have to know what is happening with China and Chinese news, because the Aussie, the Australian economy is intimately tied up with China, because it's their biggest export market. And that's the kind of stuff you have to get to know. Now, the good news about the Forex market is all this data comes out on a nice cyclical basis. The retail sales always come out at the same time of the month. The RBA, you'll know in advance when they meet. And talking about the Aussie dollar, of course, today we have the FOMC. So that's the kind of background which you have to get to know. I sort of liken it to the fact that it's like a stock. When you're not investing in these currencies, what you're doing is you're taking advantage of the fluctuations, and those fluctuations caused by all these other, these reasons. It could be sentiment, it could be a piece of fundamental news, it could be Donald, it could be, but once you get to know them and you look at the chart and the price action has some context, even if, you are on the faster time frames. Now, there's what I also want to say about the CSI, and this was a question that came up in our VPA room. This is the community that we've put together for people who have bought the program, and it was one of our new students. He was looking at the CSI, and I believe he trades the faster time frames, but it's always useful to look at the slower time frame. And he sent a message, and I hope, if he's here, I hope he doesn't mind me mentioning this. He looked at this, and you can see all these lines sort of bunched in the middle of the daily CSI, and and he wanted to know, said, well, this, is this, what does this mean, as it were? Well, it's very interesting, the CSI, because it tells us an awful lot of what we can expect, not only on the daily charts, but on the faster charts as well. What we really don't want to see is when all these lines are stuck in the middle here, because it tells us that all the pairs are they are going to be in a congestion. As you can see here, yes, there's movement in, we can see the Swiss yen, we can see the Aussie, we can see, we can see some nice straight lines. What we want to see is some really strong looping, moves in these currencies. It tells us there's a trend there, there's movement, and that's what we want to profit from. When they're stuck in the middle here, particularly on the slower time frames, it tells us that those charts are they're range bound, they're moving sideways. Now they may be moving in quite a big range, and there is going to be an opportunity to trade down in the faster time frames, but it presents its own challenges in those faster time frames. So you'll find prices will reverse, prices will they won't carry on higher, and it's because of the structure of the chart in the slower time frame. So it's just something to be aware of. So the CSI tells you when there is a potential trade, but also when possibly, there may be a potential trade, but it's going to come with certain restrictions, if you like. Now, going to the matrix, we can see here the Aussie, certainly the numbers that are generated by the indicator here. This is 52. This one's Euro Aussie, which is -25. Well, it's telling us that if we were looking at an equal range of movement, forget whether it's going up or down at the moment, in these two pairs, that value should be, -50, -60, close to that one. So what this also tells you is that there is more movement in the Aussie yen and the Aussie dollar. In fact, the Aussie dollar is one that I have at the moment. And also the values, this indicator is being upgraded. I know I've said it before, but it is, because it's on TradeStation. And what we're going to do is, when that value is displayed, this is +52. Is that an average value for this pair? Is it a low value? Is it a high value? If it's a high value, sometimes this goes into 3 figures. We know we've had a really, really good move. When it's very low, it's very, very desultory. Now, what the CSI tells us, going back to the CSI, if I just click all these off as well, and what was it? So the Euro Aussie. There we are. Look, there we are. Euro Aussie. I said to you that sort of ticked up a little bit. That's fine. But one of the reasons it's not as good as this one is because the lines in this time frame are moving in the same direction. So the CSI tells you, highlights potential trades, particularly on reversals. That's when they are overbought or oversold, and we can see a classic example here of the dollar and the Aussie. They're very, very nice overextensions, and we've actually had a reversal, or when it comes to a cross. Now, and this section of the webinar is a little bit long, so I do apologize, but it's really as a result of some questions that came from one of our students. And let's have a look if I can bring this up. This is really not a very good example at the moment, although it seems as though we've had a very nice break on the pound and New Zealand. Right, in my analysis, I often talk about the session crossovers and particularly those of you who follow my Forex page on Forex, I will say things like, oh, this is what the state of the currencies are ahead of the US Open. And I suddenly realized, actually, I need to clarify that a little bit, because there are, in effect, 2 US Opens. The first US Open, if you like, is when the Forex market opens in North America, which is about 1 o'clock our time, 1300. You're coming to the end of London is kind of, going into lunch, as it were, and at about 1 o'clock, forex element of the market. The forex traders tend to come. That's the time they kind of start. That's when it's given as the start of the forex US start of the US forex session. What we then have is, of course, the open of what we call the cash markets. Those are the physical markets. Now, back in the day when we started, you know, everything had a physical open and a close, but now we have Globex. Now we have, as I said, 24-hour markets. And what tends to happen, what can happen, is you can get a lovely move in the London, beginning in the London session, as we have seen now. But coming to the US Open, and by that I mean the Forex Open, you will get what is often what I tend to call a technical reversal, or a correction, if you like, and that is simply a function of new traders coming into the market. And once you understand this, because you can be in a trade, and you can be in a nice trade, and suddenly something, you know, you get this, what I call this technical reversal, but the sentiment reversal for that particular pair tends to occur more at around when the cash market opens. And I did actually have a really nice example of that. It's not such a good example on the pound New Zealand, but I won't labor it anymore. What I suggest you do is, if you are trading the London session and you're in a good move and you know, things are moving nicely, just be aware when you're coming up to about 11, 12, 1 o'clock, and you will see it looks like you will hit a resistance, a support level. If you use Fibonacci, you could be looking at Fibonacci. Bear in mind that, you know, that is happening because we are in the start of the US session. That reversal may then completely, you either then decide to come out, or you think, no, I think it's just a technical reversal. But be aware that by the time the US cash market opens at 2:30, that will actually happen. As I said, this is not a fantastic example of it, but if you can see here, the main reversal was just before the start of the cash market open. We have this really nice 2-bar reversal, and this is where your candles come in. A lot of 2-bar reversals, a lot of bullish and bearish engulfing candles. It often will hit a significant support or resistance level. You know, this was the move lower coming from London, and away we go. And it was actually away we go, and then a lot of congestion after that. But in fact, then then it kind of carried on higher later on. But that's what I wanted to say on that. And while I've been talking, what's happened to my Aussie dollar? Let's have a look, and let's have a look here. Where are we here? This is from this morning. Really, it's just another lovely example of moving away from this congestion phase here. Strong support from the volume point of control, some great support underneath from the accumulation and distribution indicator. Lots and lots of volume, which is what we want to see. Yes, we've had a bit of volatility. This is on the 5-minute. We've got activity here on what we call our tick speed. This actually measures, if you like, the speed of activity, what is actually going on behind the price action. It's a very particular indicator that we have developed. We want to see lots of green. When it moves into the red, we know we're going to get a bit of a pause, and what we want to see is lots of volume on the up candles, which will confirm that this price is moving higher. And when we see the volume on the down candles, as one of our other students pointed out to me, we know that it ain't going to go very far. And I suppose that really does sum up volume price analysis. So that's on the shorter time. Where are we here on the? I tend to use the 10-minute. I do like the 10-minute chart very, very much. And again, this is we've had the congestion phase, but if you look further back, this move actually started back in the depths of the Asian session. We had this little push higher, decent amount of volume, but it then ran into the volume point of control, where it's been moving sideways. Still, the 10 monitor stayed blue because there's nothing to suggest that the price was going to reverse, as it were. A lot of volume coming in at the start of the, just before the start of Eurex. That's the European Open. Where are we? London. Yeah, not so much here. You know, it's ticking up. Aussie dollar is, it can be a nice measured pair to consider. You know, it's not going to, it's not a very volatile pair. So it's a nice pair to have in your portfolio, because it does also, it moves in Asia, but it also moves in London as well. Very quickly look at the 60-minute chart, which is what I benchmark my my 10 minutes. Want to make sure I've got enough data. Otherwise, it's no, I have. Yeah, that's fine. Yeah, that's the move lower. We've got and we're just ticking higher, and we're looking at the levels. You'll always find that prices will always move a lot slower going up than they move when they go lower, as we know. And finally, I've got my Renko here, which I also use, and that Renko helps you to stay in a move and in a trend, which is really all we need to know as traders, because as David always says, and I say, the most difficult part of trading is not actually finding potential entries or even exits. Your stop loss sometimes will take you out of your trade. It's actually staying in a move. Right, I'm going to pass over to David. I'm going to focus a little bit more on my Aussie dollar. If you've got any questions, just please put them in the chat box. I'm more than happy to answer them, and we'll take it from there.